If you're watching this video, you're probably thinking about getting started with shares or investing, but you don't know where to start. I'm guessing you have a bit of money saved up, but not enough to buy something like a rental property, and you want your money to work a little bit harder and a bit smarter for you. If that's you, welcome to my channel. In today's video, I'm going to go through, a few questions I had a couple of years ago when I started investing to hopefully help you make more informed decisions. With that being said, let's get straight into this. So one of the questions I want to answer is, why do people actually invest? And I think this really breaks down into three key areas. The first is to grow their money over time. So putting money in, say $100, and then just watching it grow over the weeks, the months, and the years. The second could be earning passive income from the dividends. You might invest a really big amount of money, and then that share or shares might pay you every quarter, every half a year, or every year, but you get sums of money from the investment that you've made. And the third reason I think people really invest is to support companies that they believe in. Regardless of what your reason for investing is, I do want to share with you a bit of knowledge and things I've learned over the years. I also want to let you know that this is not financial advice. If you want financial advice, go speak to a financial planner. This is just some of my thoughts and a bit of my experience. So what exactly is a share? In the finance world, a share is really a unit of ownership of a company. A share would represent a small, or if you've got a lot of them, a large part of ownership of an organization. Think about this, it's like, why do companies actually allow people to invest in and buy parts of their organization? Some of the main reasons that companies allow and they issue shares is really to raise money or to raise capital, and this allows them to fund their operations. It could be money they use to reinvest and expand their business, or depending on the organization, it could also be money they use to pay off some debt. The two main types of shares and investing I want to talk about today are shares and ETFs, or exchange traded funds.
Today, we are going to talk about the differences between a share and an ETF.
So what exactly is an exchange traded fund? Well, if a share is getting, say, $100 and investing into one company specifically, that is essentially a one-to-one investment. An exchange traded fund, or an ETF, on the other hand, is getting that same $100 and really putting it into a basket or a bucket of companies. The easiest way to break this down is you could walk into the grocery store and you could buy an apple. That apple could be amazing or it could be a bit sour, but you're putting all of your money into that one basket. Or you could get that same money and you could buy something like a fruit salad. Now you're not getting a whole apple, and that apple could have been amazing or it could have been a bit iffy, but you're getting a slice of an apple, and you're also getting a slice of watermelon and a slice of rock melon. So you're actually diversifying what you're investing in. You're not getting a whole apple, but you're actually diversifying the risk of, is this going to be good or bad, by buying bits and pieces of all these different fruits. I've invested most of my time and money into exchange traded funds, and this is because it provides instant diversification, which is one of the key benefits of these ETFs. Instead of putting a lot more risk, and it's also, you get possibly less reward in one company, you diversify that risk across several different organizations or bonds. And to me, that is a really nice way of getting started, because it allows you to say, hey, I'm not sure, but it's a nice dip or a toe in the water. So what are some of the features of both shares and of ETFs? Well, when you buy shares, you're buying a share into one specific company. Whereas if you buy an ETF, you're buying, a small piece into a fund that owns the assets, right? The share allows you to invest directly into an organization, but that also means there is a lot less diversification. So if that company goes up or down, you ride those waves a lot more with that one company. Whereas in ETF, that gives you diversification. So if one company goes up, one company goes down, you get a little bit less fluctuation because your money is spread out across a couple of different companies. When it comes to the risk level, now both are risky. I've had my ETFs and I've had shares be in the red before, but with shares, it is generally a higher risk because if that company goes down, well, there's really nothing, there's no offset to it. But also, if that company goes up, you're usually riding a bigger up wave. Whereas the ETF, on the other hand, because it is diversified, you get, in my opinion, you get a bit less fluctuation. So there are less ups and less downs. So it is a little bit more of a stable ride. But of course, both are definitely risky. When it comes to the research required, and this is one of the reasons I use ETFs more so than shares, I believe shares require a lot more research and understanding. Otherwise, to me, it's a lot more like gambling of, I'm going to put my money here and we'll see how it goes. And ETF, on the other hand, I use CommSec Pocket. That is run and operated by CommBank, which is one of the big banks in Australia. They give you a lot less options than the overall stock or the share market. And I think they have a bunch of smart people really helping find these ETFs that are going to do well. So I have a lot more trust in saying, I don't know really about all these companies, but I trust in the bank that is running these shares. They've got a team looking after it. Whereas shares, I feel like you're on your own and there is a bit more risk involved there. When it comes to the cost of both, I'm not actually sure which is cheaper in the long run, but I looked at the cost of buying and selling shares via the CommSec Pocket app, and I was happy with the costs versus the potential rewards, but definitely do your research on that. And then when it comes to voting rights, which for me, I'm not really interested in this. When you own specific shares, you can potentially get a voting right in that organization. Whereas ETFs, you don't really have voting rights because you don't own specific shares in an organization. Obviously, this is a bit of my understanding, so it may not be 100% correct, but this is what I've learned over the years. So where do I invest and why? Well, like I said, I invest a lot of my time and money in ETFs for four key reasons. The first one is it's run by one of Australia's big banks, or the one I use is run by a big bank. And that means that I trust the bank and I feel like they have a team of people that is really looking after making that a successful investment. The ETFs are a lot simpler to get started. When I was looking at buying, especially on the American Stock Exchange, it was a lot to really just get the account set up. With the CommSec Pocket app, and this isn't a funded or a sponsored video, because I was already a customer, it was so easy to get started. To buy or sell was really the click of a button, and it was just a really simple way of micro investing. So really, I invest with them because the barrier to entry was a minimum of $50. It was via the bank, so it seemed quite trustworthy, and it looked like they had a team of people behind both the application and the ETFs that I figured there's a lot of time and effort that's gone into this product and a lot less research required on my side. Whereas shares, I feel like you do need to spend a lot more time, understand the platforms and the costs and all that sort of stuff. I feel like there is not someone holding your hand throughout the whole share process. So when should you get started with shares and investing? I started investing back in 2020 when I had a bit of disposable income, and I think I started with a $50 purchase just to try the platform out. Since then, I've put in over $20,000 and I've made almost $10,000 back. So in 5 years, I've had about a 50% return, which is really, really cool. And it's really cost me not a lot of time. I go on the app, I log in a few things. When I have some money, I put it in, then I set and I forget. In terms of how much money do you need to get started, I think really be responsible and use what you can afford to possibly lose or what you can afford to put in. I started with $50 and then I did $100 one week and maybe $500. And over a couple of years, I ended up putting over $20,000. But I think you should really be smart because these are not a sure thing. You're not always going to make money and you can potentially lose money on these. And I guess the question is risk, all right? Nothing is a guaranteed return. Even with my ETFs, there was a long period where it was all in the red and the negative. So even though right now my shares or my ETFs are up, there is definitely a lot of risk associated. So just be smart with what you choose to do and where you choose to invest. And I guess the last question is, well, how do you get started? Here in Australia, I use the CommSec Pocket app because it's part of the bank that I'm already with. It's got the backing of the bank and it was easy to set up. Depending on where you are in the world financially as well as physically, I'll look at what options work best for you. Do you want to go and buy shares in a company that you trust or a company that you think is going to do really well? Are you going to go invest in a ETF or a managed fund like a CommSec Pocket or a Vanguard or a Spaceship? I would definitely recommend doing your research, watching a few more videos, reading a bit of information about each one, and then start once you have an informed decision when you know, hey, I'm going to try this with maybe it's $50, maybe it's $100, and then get comfortable with it. I wouldn't recommend over investing or just putting money in without really knowing the platform, the pros and the cons of it. But I definitely think, was it a worthwhile investment for me starting investing 5 years ago? Definitely. I mean, I learnt a few different skills. I got to watch my money grow, and right now it's up by about 50%. And one of the cool things that I like to do is share my experience, knowledge, and wisdom with people. And it's allowed me to make these videos that hopefully help you make a much more informed decision. So there you go. That's a bit about how I got started in investing, what I've learned, some of the difference between shares and ETFs. I'd recommend go do a bit more research and then good luck. Let me know how you go in the comment section down below. Thanks for watching and we'll see you next time.